OC. Okay, so first thing I just noticed, there are all-time highs. So
how do you deal with a stock like that that's clearly on an upward trend but doesn't have any historical? Are you worried that it's overextended?
yes, I'm always worried that it's overextended. So in terms of options, it's interesting because when you're dealing with full-time freight continuity to the upside, full-time freight continuity is saying they can keep buying, but buyer exhaustion or broadening formation says that you're still facing exhaustion risk, and technically the risk to reward is better on the put side because of the fact that you can see a momentum type of move to the downside because it could just be profit taking from it going up. Let me see if I can.
Okay, so I just didn't want to deal with something like that. Really, it's been on a very long uptrend.
This one. Okay, so you see what I'm doing here? I'm drawing fib. So this is how, for anyone, if you're in all-time highs, like where potential price targets, you draw fib extensions. And where do you place what's that?
Sorry, never mind.
Okay, so yeah, you use the fib, trend-based fib extension tool, and how you're supposed to use the tool, and feel free. So I know there's multiple ways you can use it. So if anyone has another way that they use it, feel free to chime in. But how I use it, or how I was taught to use it, is that you take the swing high and swing low. So because this is a wave, right? You are starting the next wave up. You start from the original wave 1 to wave 2, and you are taking the extension of wave 1 and wave 2. That is what you're looking for potential price targets for this wave 3, essentially. So what we're looking for is the extensions of this wave 1 to wave 2, and that's what gets extended using this tool. You place your fibs, whatever, the ones that we use is like 0, 0.236, 0.382, 0.5, 0.618, 0.782, and so forth, right? And then so this is where you can use, like, okay, on the 3-month time frame, based off this high and low, this swing high to swing low, these are potential price targets for OC on the longer term horizon, right? So now we see that we have a fib base extension to this 153.92. What you can also do is that if you want to find extensions like within this time frame, you would go to within this range. Like, let's say you're saying like, oh no, 153 is too far, right? You want to see if there's a potential price target within this range. You'd go to a lower time frame, and you would take let's go to the week. This wave is definitely extended. Okay, so if we were to take this is a wave 1, or this is a wave right here. You create a low right here, and before you extend. So if you were to create another fib extension from here to here, down here, and extend it, these are going to be your other price targets as well. And so what's crazy is that we actually you have 2 fib based extensions that match up with that 153 level. So this would be my next area for price targets in terms of in terms of fibs. Now, second, there's also another thing that you can use: pivot point standard indicator. Pivot point standard indicator will also give you the mathematical equation of possible areas that institutions could be taking profits at. Because think about this, because we're at all-time highs, we don't have any previous historical data for us to use to base our price targets off of, right? Or previous areas of support and resistance. So all we can use is these pivot point standard indicators that these institutions are using. And why is because these pivot point standard indicator or these price targets are the formula is based off the previous or the previous data that we've been given with price action. And so that's how you can use it as well. If I were to go to like, let's go to the daily. Now we have, oops. Okay, and now we have all these price targets. Does this make sense?
So when you're looking at the daily and you see all that kind of sideways action, is that a bad thing?
Well, for me, this is chop, and you're in a box range. You just haven't broke a side yet, so you're just inside. This is just inside, right? Inside of this.
So because it's so extended, it could actually.
So that's why I say the most favorable, or in terms of risk to reward, I would say the downside is more favorable because when it wants to fall, and I'm glad we're talking about this because when it wants to fall, think about it. It's going to start taking out all these stops, right? And when it wants to fall, it's going to lead to a cascade effect, and it's going to lead to a bigger move to the downside. That's why when we say the downside is more favorable, it's not just based off risk to reward. It's also the potential how fast they can make that move, because this is like a PMG essentially back to the downside, and we know it can just take in a couple of candles, they can take out all these stops. I think of it as like built up pressure, and then when it finally wants to break, pop. It can pop all that pressure. Like Apple, this Apple is an example what we mean that the downside is more favorable because because this is move, and this is like literally you can like screenshot this picture, this image. This is what this is what price action looks like at its finest. Like, I know it sucks in terms of psychology, especially you're long, but this is literally price action at its finest and what the PMG looks like at its finest. You built it up, built all these stops, and you just take them out quickly in a matter of days. And that's why we say the downside is favorable, because when they want to say, all right, we're done, then they can just literally, it could be a big move to the downside. Does that make sense?
Oh, absolutely. And guess what's the saying? Take the staircase up and the escalator down.
Yep. You got it right. Hit it right on the head.
Okay, so sometimes you find these stocks that are trending up, but they're all at all-time highs, and for a long-term portfolio, they have more benefit than for any kind of day trading play.
Correct. I like to look at those like if we know that if we say, okay, why are they at all-time highs? Well, because the fundamentals look good and their balance sheet looks good and all that stuff. Then I like to think of them as long-term plays in shares, because the shares you can experience more of a drawdown if it comes down a little bit. With options, you may not be able to get that back because time is a component that you also need with options. With shares, time doesn't matter. You get what I'm saying?
Yes.